Let's continue the discussion with my next guest. Andrew Slimmon is Senior Portfolio Manager at Morgan Stanley Investment Management. And Andrew, I all year long, I mean, especially back in January when the market was similarly behaving kind of on a sugar high, you were a little bit cautious. So just, is that a position that you still maintain? And what would you say about everything that we're seeing play out here?
Sure. Thanks, Kelly. So look, I think what has been consistent through the full year and has really helped us and helped our investors is this concept that it's the third year of a bull market. And in the third year of a bull market, you get a positive but subpar year. Now, the third year started in the fourth quarter of last year. And so by early this year, when the market was up almost double digit off that 5,700 start to the third year, it was time to be cautious. But then we added risk in April when the market was down double digit, and now we're back up to levels where wouldn't be consistent with a third year of a bull market. So it's time to be a little bit more cautious. So I agree with a lot of what Dan said. He can fill in the narrative of what will cause it. But I just think that we've had a very good run. I do think second quarter earnings will be strong, so maybe we get a couple more weeks of strength. But again, I think the risk opportunities here aren't nearly as good as they were, in the spring when the market was substantially lower.
Right. I mean, you say, and this goes back to the kind of the biggest question that everybody has. Tariffs, you say, are not going to be the cause of this correction, even with 30% on EU and maybe 200% secondarily on China. Whatever the numbers are, it seems like the shock and awe is completely gone now.
Correct. The market never reacts the same way twice. And I think investors, after April, where they sold, Wall Street massively cut guidance. They're saying, well, I'm not going to get burned again by this. I'm not going to react. So my experience is that if there is a sell-off, later this summer, it'll be for something that the market hasn't priced in. Could it be, as Dan said, maybe it's the Fed doesn't cut rates or higher yields or economic scare. You figure it out. I just think the market is a lot more vulnerable given the magnitude of the rally and the nature of the rally. It's been in very speculative stocks. I remember I was on with you in February, and I said the same thing to you, Kelly.
I remember.
Boy, the euphoric stocks are really worrying. It's getting me nervous, and I kind of feel the same way today.